Hello friends, good morning. Let's understand today the BSE SENSEX and its journey for the last 45 years along with the behavior of the BSE SENSEX. BSE SENSEX एक ऐसा इंडेक्स है जो 30 टॉप इंडियन कंपनीज को रिप्रेजेंट करता है. These are the top 30 companies with strongest balance sheet and financial might. These are the constituents of BSE Sensex. For example, Reliance Industries, Tata Consultancy, TCS, HDFC Bank, Hindustan Unilever. And if we look at the index or the constituents of index, we will note that it represents many industries or segments. For example, banking is represented by HDFC Bank, ICICI Bank and State Bank of India. FMCG is represented by Nestle, ITC, Hindustan Unilever. Same way, IT is represented by TCS, Infosys, and SCL Peru, SCL Tech. So basically, they are the leaders in their segment, and these are the strongest companies of India. Now, let's understand the BSE Sensex from 1979 to 2024, that is 45 years. We will look at some observation and then try to infer or try to derive a learning out of these observations. So, this is the Sensex from January 1991 to June 2024 when it hit the lifetime high of 80,000. Some of the observations are in January 1991, the Sensex started at a level of around 2000 and today it has reached 80,000. The CAGR in the last 45 years has been 16% and it is not a linear progression. It is not a linear progression. It shows uncertainty, volatility and risk associated with the market. It depicts both bull run as well as bear run. And we also note that every bull run has been followed by bear run and every bear run has been followed by a bull run. Now let's look at some more observations. Look, if a guy has entered the market at this point, let's say September 7 or in mid of September 7 or May 8 and has exited here at this point, he has suffered heavy losses. Same way, if a guy has entered at this point and has exited at this point, he has earned handsomely or he has made handsome gains. So what I am trying to say is in short term, maybe for a period of 1 or 2 years, there may be lot of volatility and by chance a guy may lose heavy amount or may gain some amount. One more interesting observation is there. Let's see. For example, a guy has entered the market here again in September 07 and has exited the market in January 2011. Even after a gap of 4 years, there has been no return or a minimal return. Why I am asserting all these points? Because I want to make it a point that past has suggested or history has suggested us that we have to remain in the market for the minimum period of 10 or 15 years so that the probability of gain is 100%. That I will explain you in my next slide. So what we are learning from this graph, that is from January 1999 to 2024, that there will be uncertainty in the market. It will not be a linear graph. There will be volatility. Every bull run will be followed by a bear run. Every bear run will be followed by a bull run. And in longer period, if the investment time increases, then only volatility will be nullified or we can expect handsome gains. I hope this is clear from my present slide. A very important which I missed explaining is that when we look at the past, we can easily say that this was the, let's say during this period, this was the top, this is the bottom, or this one was the top, or this is the bottom. But it is easy to infer in the past, but not easy to dictate in the future. We can't predict whether this is the bottom of the market or the top of the market at this point. Though there are several factors, though there are several ratios by which we can define what is an expensive market or what is a cheap market, like price to earning movement, price to earning ratio, or the price to book ratio, or market cap to GDP. But these are not certain that they will decide the fate of the market, because in short term, even sentiments can drive the market. Now let's understand. Suppose if there is a compromise on Ukraine or Russia war, market may go from 80,000 to 85,000. So this will be the bottom at this point of view. And if let's say the war escalates between Ukraine or Russia, then markets may go from 80,000 to 75,000. So this will become the top of the market. So what I'm trying to say, it is not easy to predict what will happen to the market in future. But one thing is for sure, that if someone has remained invested in the market for 10 or 15 years, he has earned a decent amount, or a normal approx CAGR of 15 to 16%. To make it clear, I'm moving to my next slide. This is again some charts which are showing the bulls and bear runs of the market. Here I have made one other important chart which shows the rolling returns of the market for 1 year, 3 years, 5 years, 10 years, 15 and 20 years. This chart has been compiled from March 79 to March 2022 and denotes the probability of gain or loss in the market. So the interesting observation is that if someone has remained in the market for 1 year, that is, if someone has stayed in the market for let's say 1 year, the probability of gain has been 29 times out of 43 times. Same way, if someone has remained invested in the market for 3 years, the probability of gain has been 34 times out of 41. For 5 years period, the probability of gain has been 36 times out of 39 times. So what we look, or it's a very interesting case study if we look at that, as the period is increasing, probability of gain is also increasing. So when we move from 1 year rolling return to let's say 15-year rolling return, the probability of gain has increased from 29 out of 43 to 29 out of 29 times. So this is the reason we always say that invest in the market for minimum 10 or 15 years. If you are lucky, you may be a lucky that maybe if you, let's understand that in the last 4 years market has not shown downward movement. So if someone is invested in the last 3 or 4 years, he has gained handsomely and he has not seen a major bear run. But this is not practical every time. So we have to remain invested in the market for 10 or 15 years. I hope it's clear. Now let's understand some bull runs of the market. This is the BSE SENSEX. In December 2023, it was 67,481. In January 2024, it is at 72,271. So if we notice that within a period of 1 month, the Sensex has moved from 67,000 to 72,000. That is a steep hike of 5,000 points in just 1 month. So this is a bull run, or this is the exceptional gains. Now understand what bear runs are there. These are the 10 biggest single day falls in the market. For example, on this 4th June 2024, on election day, market fell by approximately 4,389 points. On March 23, 2020, markets fell by 3,900 points. So what I have done is, basically I'm trying to tell you, even if a market has risen like anything, the markets has fallen also on some days. Some days may be very good for the markets, some days may be very bad for the markets. So we have to be in the market for 10 or 15 years. That's the reason we always say that if you have a goal for a longer term horizon, be it a retirement goal or a education, or a education of your kid, the goal is 10 or 15 years away, then you can opt equity markets. If the goal is for a shorter duration, you should go for a debt product. I hope you would have understand the Sensex in a better way now, and you understand that Sensex is full of volatility, uncertainty, and there will be bulls as well as bear runs. But one thing is for sure, if someone has remained in the market for 10 or 15 years, the gains have been 15 to 16%. It depends on the GDP of the country and other factors. Normally, market always give returns of GDP plus inflation. So if GDP is around 7%, inflation is around 6%, so returns will be around 13% in a longer run. Thank you.